So far, the IRS has issued back, it's over $130 billion in refunds already.
Get your billions back, people.
And we're not even halfway through the tax season.
Now, are you looking at a rebate, or are you looking at a refund, or are you looking to pay?
Well, I'll have to file and find out.
You want to break even now.
I'll have to file and find out. I'm not sure.
Get those taxes done. Take all your deductions. Like, okay, let me give you an example, a deduction that you might not think of.
Right.
Looking for a job, right? You've been looking. You're always hustling.
Sure. Well, I have a couple of jobs.
You can deduct that. The mileage.
Okay. What about shoe leather if I just walked from one place to another on Mama Street?
If you take pictures before and then you wear down that sole and you see that there's a hole in it, yes, absolutely. Those are working shoes.
Sure. Well, they're walking shoes. Walking to hopefully be working.
Try that with the IRS, huh?
I don't know.
You might get hot at it.
We have a guy who, he does this. This is his gig. He's the tax director at Online Trading Academy. Michael Atias joins us this afternoon. Michael, you're on with Gary, Jeff, and Tracy on 700 WLW. Good afternoon, sir, and how are you?
I'm doing great, guys. How are you guys doing?
Mike, was I right about that deduction as far as looking for a job? You can write that off?
Absolutely. When you're looking for a job, there's a lot of costs associated with looking for one. For example, sometimes you got to fly, stay overnight. There's meals, there's cab fares. Sometimes you're paying a headhunter. Sometimes you're paying a professional person to run your resume, right? LinkedIn, all these services, they cost money, and they can up to thousands of dollars if you're trying to land the right job.
What about
That's how you can write us off.
What about networking with a prospective employer, staying at the bar and having a few drinks?
That's the gray area right there. It's definitely a lot of fun to do that. But if you're buying him or her the drinks or the meal, you can take that as an entertainment cost as part of your overall process of looking for a job. You just got to make sure you have some documentation for that.
And Mike, that's a legitimate point and a legitimate deduction. I don't think it's 100% like it used to be anymore, but I think you can get 30%, especially if you document it and maybe have note it in the receipt who you were with, the time, and the place. I think that could fly. Yes?
That could fly. You can claim up to 50% of the expense associated with meals and entertainment. But just like I said, you got to have some records. Most of the people, when they lose an IRS audit, it's because they don't have any records.
Yeah.
That's the number one reason.
Well, give me some more deductions that people kind of slip up and they forget to
what's the most common, Michael, that people don't know about?
There's many common things. Some people are not aware of that if you live in a state that doesn't have state income tax, you're actually allowed to write off your sales taxes that you pay. And,
no kidding.
And sometimes, go ahead.
I said, no kidding. I didn't know.
Yeah, you can do that. And in some states, it actually, even if you pay income tax, you may have a big transaction in 1 year. Let's say you bought a car, right? That could be a few $1,000s just in the sales tax alone. And you might be in a state that your state income tax may be $1,000 or $2,000 a year, but your sales tax that you've paid throughout the year was $5,000 or $6,000. So you're better off doing that. A lot of people are not aware of that because they use different softwares like TurboTax, and they don't go through that depth of doing that calculation.
Do you like the software, the whole TurboTax and stuff like that for just the person's simple tax preparation? You like it?
For a simple tax preparation, it's not bad. If you got a W-2 and a mortgage interest, maybe you can swing by with that. But once you start having investments or businesses or more complex tax issues, it really is not the solution. We deal a lot with traders that trade the financial markets. Mm-hmm. TurboTax is definitely not the solution for that.
Is it better? Is it beneficial? Even for any kind of, even if you just are personally considering yourself a business, is it better to be incorporated or have your own LLC than not?
Most of the time it is. Look around, you'll see most people, they are incorporated, right? Every little business, it's an Inc. or an LLC at the end because there's great benefits to it. Asset protection, tax deductions you can do, a lot of different things. You can attach retirement plans to your businesses. Many different strategies you can really reduce your tax liability. So that's why when you have a serious business or thinking about one, you really have to think about incorporating. Most people do that.
And it's not that expensive to do. You just got to fill out the paperwork basically, and boom, you're in. We're talking about. Go ahead, Michael.
Yeah, it really isn't. It's just, we're talking about, a few $100s probably to do this. If you want an advisor to work with you, maybe you pay a little bit more so you have a peace of mind. It's not just setting up the company, it's knowing what to do with it afterwards. That's where a lot of people fail. They don't keep the records, they don't follow regulations. So it's not just, filing a state form and be done with that. But you could do that route. And again, it's not very expensive to do that, and you're in business.
We're talking with Michael
millions
Atias.
of businesses in America.
Michael Atias, the tax director at Online Trading Academy. If you can hang on just for a second, Michael, a few more questions for you. Don't mind, do you?
Absolutely.
All right, hold on. And it is 27 now as 700 WLW. Gary, Jeff, and Tracy talking with Michael Atias, his tax director at Online Trading Academy. Tell me what Online Trading Academy actually is, Michael.
Well, we're an education facility. We have 35 centers worldwide, many of them in the United States, and we train people how to trade the financial markets, stocks, options, futures, Forex. We also have a new financial matters program that deals with all the issues everybody has, like how to finance your education, college funding, retirement planning, estate planning, and other major topics that people need to know about to build their wealth.
Yeah, Michael, let me ask you, you're talking about the traders. I'm sure a lot of those guys are day traders trading from home. Maybe that's their full-time job. Talk a little bit about the home office and the deductions, because I know that is a serious, and people get scared about being audited by the IRS. That's a red flag for the IRS, right? Home office deductions?
It used to be a big red flag. I think it's no longer as big of a red flag because many people today work from home. A lot of people have small businesses from home. They sell stuff on Amazon or on eBay. They do a little bit of consulting on the side. Or they work for their employers and they live too far from work. And actually, employers would like for them to work from home because they save on costs of having an office. So once you have a certain type of setup, you can definitely claim the home office. And it could be several thousands of dollars a year for you. I mean, you can write off things like mortgage interest, property tax, if you're renting the rent,
electricity
bills, electricity, right, internet, and go on and on and on. So, I mean, you don't write 100% of that. You write a percentage of that, but still it adds up to thousands of dollars every year.
And that's on the square footage of your office space as compared to the rest of your home. I don't want to get too technical, but right, that's how you write it off.
That is true. If you got a 1,000 square foot apartment and using 200 of it for an office, then 20% of your overall expenses can be deducted.
Yes,
or you can go to an alternative method the IRS came up with last year. You just get $5 for every square foot you use, up to $1,500 a year. So,
what would you advise? I mean, you're dealing with those guys. I mean, that's pretty simple. I think that's a good idea right there. Just go basic $1,500 deduction.
Yeah, if you want to keep it simple, you just go basic $1,500. It's completely legitimate to claim. Of course, you've got to have the right setup. So I don't know if we wanted to get too technical here on the air, but yeah, you definitely can do that.
Now, how much can you deduct for charity without showing any kind of documentation?
Oh, boy.
Well, the IRS closed that loop. It used to be
Really?
great business for people, right? You would come with your car. It doesn't run at all. And you say, hey, it's worth $15,000 on Kelley Blue Book. Yeah, it doesn't have an engine. So they solved that issue with you got to get some kind of an appraisal. On a car, you absolutely have to get the charitable organization to give you a form that says what the car was sold for, and that's what you can write off. But on other things, like when you go to Goodwill or Salvation Army, any other organization, really when you go there, you notice that they give you a blank receipt, right?
Yeah.
And they basically tell you, listen, you fill it out. As long as it's reasonable, then you can claim it. And, when we do the taxes, one of the things we look at is the percentage of your charitable contributions versus your income. And there's a certain threshold you don't want to surpass. But I think for the average person, you can claim several $1,000s there without a problem. Of course, you have to actually give something out. With cash donations, you have to have receipts for anything above $250.
Michael, let me ask you this. When I was looking for a job years ago, I took my boss to a strip bar called the Brass Ass. And he was a little out of control and started getting all handsy with one of the strippers. And I took pictures. That's one of the reasons I got the job. Now, can I write that film off that I used? Is that a legitimate write-off?
Absolutely, man. Let's just start a production company, and we can go out and find people at embarrassing moments.
It was kind of
blackmailing,
him.
right?
I blackmailed him.
Exactly.
That's what I'm saying.
Blackmailing is fine, but here's the thing with illegal activities: you can't write expenses against it. The IRS expects you to claim the income, but you can't write off expenses. That's what the guys up in Colorado and Washington State have with the whole marijuana business, right? They can't accept checks, only cash.
In closing, Michael, that's what happened to Al Capone. They didn't bust him on murder charges or anything else. They busted him on tax evasion.
Exactly. I say the IRS is worse than the mob because the mob can only threaten to take your money and it can kill you, but the IRS can actually take your money. Yeah. So,
and with
more power.
And with the repeal of the estate tax law, they can kill you and then take your money. Michael Atias, Tax Director, Online Trading Academy, thank you so much for your time, sir.
Thanks, Michael. Good information.
You guys. Have a good one.
All right. News next to the home of the Reds, 700 WLW.
Discover